The Genius Act passed legislation yesterday in the House and the Senate, and now it goes to the final stages. It could be in front of the president as quick as August. But what does it actually mean? Why is everyone talking about it? And is it finally going to be bullish for your Bitcoin and altcoin bags? Well, we'll break down some of those key things to understand and why this is an important bill that has just been passed. So go ahead, hit that like button and subscribe to the channel. Let's get into it. So like I said, it is here. The Genius Act just dropped with actually a pretty resounding vote to the yes. This is obviously a big deal. How it started back in October 31st, 2008, Satoshi Nakamoto dropped the electronic cash system, a peer-to-peer way, which was obviously known as Bitcoin. How's it going? Well, the Senate officially passes the Genius Act. So I guess the question has to be, well, what is it? Why is it important? And why have so many people been discussing this point? Well, the easiest way is to kind of explain what it will do once it's put into enforcement. By the way, that could be August. So think of it this way. It's basically a regulatory framework that's going to make investing in cryptocurrency a little bit safer, but we have to give up a little bit of decentralization. So it keeps your money safe. The rule says companies that make stablecoins must save real money. Therefore, no longer are we going to get into this world of, well, USDT might be backed by gold. It might be backed by treasuries. We don't really know. Obviously, that generated the whole audit structure that sits on stablecoins. And this is going to be really, really important. If you have a stablecoin, you can also trade it for a real dollar. That has to be a fundamental part of this stablecoin. It's going to make sure that companies follow the rules, so they can't create tokens or they create coins. They have to follow strict rules like checking that the users have their coins to stop bad people using them. They also then show that everyone's backing their coins, almost a proof of reserves. It's going to protect you if something goes wrong. If you're in stablecoin, which by the way is going to be brilliant in the bear markets. Let's say you're in stablecoin. Let's say that something gets hacked. Let's say that something goes down. Depending on where you have that stablecoin, you are going to be protected. The rule means that you'll get your money back before others do. Now, this is a very new concept when it comes to cryptocurrency, and this is where we talk about giving a little bit of the decentralized nature up because, well, the reality is you're going to have to be KYC'd and everything else. And the reality is that it's going to help digital money grow. The rule book will make it easier for banks and other companies to make their own stablecoin. Now, depending on where you sit with this, depends on whether you agree with banks making their own stablecoins. But I think what we'll see is a more funneled approach in that one of the stablecoins we have out there will become just the front runner. And I think everyone will start to invest in that. This obviously is a big deal. So like we said, the Senate did pass it with a 51-23 vote June 17, now sending it to the House for consideration. The vote followed a 60-30 cloture decision on June 11th, and actually the traditional people that you would expect, the likes of Elizabeth Warren, voted no throughout, and guess what? She voted no again. Interestingly, though, you've got people like Adam Schiff who actually changed their mind and voted yes. So you can see you've got an element of bipartisan support that goes forward with this. This is a big deal. The US dollar dominance, protecting customers, and increasing demand for US treasuries will ensure that innovation in digital asset space is in the hands of the United States and not the adversaries. This is why this is such an important bit. Take out the crypto side of it. It is actually a very strategic play. And once again, we want it in a very much dominant zone for crypto, not something like Russia or China where it's very much state run. Entities with more than 10 billion in liabilities would need a federal charter. Small issuers can operate under the state regime. That means federal standards are subject to examinations by federal regulators. They can come and check whether you are saying what you've got, you actually got. So this is a good news, and I think this is why people are very bullish on it. It's certainly going to allow investment from strategic funds, capital funds coming in, hedge funds. We're going to see way more capital pour into this market when there is security that sits behind it. So watch out for this. You've also got Coinbase now looking to push a further traditional finance sector into DeFi as well. So for example, blockchain-based stocks alongside the tokenization of stock as well. These both could be very, very good news as well. Tokenized securities, which you'll know that I've talked about with something like Ondo Finance. These are a big deal. They give massive investment opportunities with a level of protection. Security tokenization enables fractional ownership of stocks, bonds, real estate. You know that if you've been in DeFi for a while, so many people have tried to do it. We're going to take all your money and buy a house, and we're going to give you some. Coinbase are coming in to do it. You're going to get companies that are going to have fractional ownership that can be tokenized and put on the blockchain. Therefore, there is no debate on who owns it. And I think this could be a really interesting avenue that I think we're going to go down, along with all this regulatory enforcement and control that's going to come in. I think could be important. Just to give you some numbers, by the way, $25 trillion worth of securities qualify as collateral from a potential $230 trillion market. Imagine some of that coming into the market. And when you think about that, it truly just makes you understand how little our space truly is. So this is obviously very, very bullish. Don't forget, by the way, if you want to trade all your favorite cryptocurrencies, check out my new exchange partner, BitUnix. We're offering you a fantastic bonus up to the June 24th. Sign up, deposit, and you can get $10 free for the first 200 users. And if you go and deposit and trade up to $1,000, we're going to give you $200 for free and up to $10 million on trading rewards. You're going to get $1,000 just for trading on that platform. So obviously make sure that you do your own research, but BitUnix, no KYC, available globally, easy to use, lots of indicators over there as well. So check out BitUnix, link is in the description for sure. So with all of that being said, what is the next steps for not only the Stablecoin Act, but the crypto markets as a whole? Well, the reality is we've got to get through the war going on with Iran and Israel. And I think we're going to see where this Genius Act comes. You're going to start to see interested parties come to the market. You're going to see companies looking to go to the blockchain. JP Morgan themselves exploring what it could be like for banks to use a public blockchain. This would be a totally different 180 from where they've been. And in my opinion, opens up the door for a massive amount of capital to come into this market under a slightly better regulatory framework. But at the same time, well, for those of us that are in the market already, could be very interesting to see where those gains go. So let me know what you think in the comments down below. Let me know what you think. Are you pro the Genius Stablecoin Act, or do you think we give up too much decentralization? Always curious what you think. And as always, thanks so much for watching this video. We appreciate your time. See you soon. Bye-bye.